Thank you so much for coming. We're so impressed by the turnout and honestly a little surprised. So thank you for coming. We appreciate you being here. So what we're talking about today is SMB and everything that has to do with lending to businesses and compliance. But we're going to expand it. I think the topic is supposed to be compliance in SMB, but we're going to talk about everything SMB and customer service and things like that. So I was very excited to host this panel because I come from consumer finance background. So this is a learning opportunity for me. So I'm looking forward to learning things about SMB lending. So thank you. And there's nobody better to learn from than this esteemed panel that we have going on of experts in the field of SMB. And so we have Brock Blake, CEO of Lendio, Pooja Elhans, VP of Compliance at Bluevine, and Ryan Hildenbrand, Chief Innovation Officer at Bankwell. Thank you so much for being here. So just to set the stage a little bit with the issues that are particular to the business. Obviously, small and mid-sized businesses are the backbone of U.S. economy. And just like any business, it comes with its own challenges and issues. From what I can tell from not being sort of as close to it as you are, that there have been a lot of changes and a lot of ups and downs and challenges in the space in the past couple of years. So just wanted to see if you can say a few words about what you consider to be the biggest challenges in the space.
Want me to start?
Yeah.
Okay. Can you hear me, Mike? There we go. As you said, my name is Brock. I'm the co-founder and CEO of Lendio. We're the largest marketplace in the U.S. for small business lending. So across every different type of loan product category, from SBA loans, working capital loans, lines of credit, term loans, and so on, businesses come to Lendio, then they get matched up to one of our lending institutions. We also provide what we call our intelligent lending engine, which helps traditional banks and credit unions acquire customers and underwrite their loans instantly. With that kind of backdrop, we have this interesting kind of purview of the market of small business lending. And especially the last 18 months have been a very unique challenge with rates rising. A lot of lenders, financial institutions really have been focused primarily on deposits. And so they pulled back significantly on lending and really focused on deposits. And what that has done in this market is you start to see this shift as banks kind of retreat. You see other kind of non-bank lenders and others that kind of step into the credit box that they would have normally lent to. And so that means everyone kind of steps up a rung as far as the credit quality that they're trying to lend to, right? And the rates are increasing, but inflation has happened. So the business owners need capital, but it's at a higher cost of capital. And the lowest quality, because all the lenders kind of moved up a rung, a lot of the lower quality small businesses, they needed access to capital. They've had a really difficult time kind of getting access during the last 18 months. Fortunately, in September, obviously, we all know the Fed rate kind of the first step with a 0.5 point decrease. And you're starting to see a lot of financial institutions that Ryan and I have talked about this quite a bit. This like last frontier of lending. A lot of financial institutions have done a really good job in commercial lending or consumer or mortgage or auto, but small business is kind of underserved from the financial institutions. And so I'm really excited. While we've had these challenges the last 18 months, I think the opportunity right now in the market is going to be great for financial institutions and really good for small businesses to get access to capital and to innovate using AI and some of the machine learning and all the other things we'll talk about.
Yeah, so I'll probably give a little bit of a viewpoint from like the compliance operations here and the challenges that SMBs face. Besides sort of all of the economy, inflation, and everything that has happened in the past 2 or 3 years. From compliance, there is an inherent complexities in onboarding businesses because you have the KYB and then there is a business need to efficiently like scale, right? Like scale and get speedy access to funds to these businesses. But from compliance, right, like there's just so much goes on because of the unique risk profiles that these businesses have, complex legal structures, limited credit history. So underwriting is difficult, and especially this problem is more acute with new startups and businesses that are applying for credit and dire need of capital. I know traditional banks have, sort of scaled back in sort of this economic environment. Fintechs have come and stepped in to fill in the gap. But again, there is far more demand than there is supply right now. And as Brock mentioned, with the high cost of capital, it definitely creates an issue. And that's where I feel like I know we're going to discuss this and the use of AI and how can we streamline some of these operations. But it is going to be challenging, right? Like SMB space, we have operational efficiencies that are absolutely needed for KYB and making sure that we can keep the costs down and also just adapt to the changing regulatory environment because it's really, really rapidly evolving right now for SMBs.
Mentioning behind, we were talking earlier, and you said that just the broad array of different products in the SMB makes it more complex. Right?
It does, right? Like because there's just a whole slew of products here, from invoice factoring, term loans, line of credit, and that's where each and every product has different underwriting criteria, different unique different profiles, risk profiles for each and every small business. So it's hard to standardize those sort of procedures and criteria from the FI standpoint. And that's where I feel like we can probably leverage some of these available technologies. And obviously, we'll talk more about it with the challenges with that as well.
Great. Brian, what do you think of the challenges?
As a bank, we're about $3.5 billion. It's been really a community bank in Connecticut. We have about 140 employees. And we really, in the last year and a half since I've joined the bank, really been focused on the small business space, trying to figure out, as it is, as Brock said, it's really the last opportunity, we think, to be able to reach customers and be profitable as a community bank at this point. The challenges, I mean, obviously regulatory, as the business itself, having lots of issues from a cost of capital standpoint. The SBA rate, went up. Basically, the payments were doubling over the last couple of years, which for a lot of small businesses, it's an incredible amount of money that has been going out the door to take care of those that interest expense. And so, I think things are coming back down. I think there is going to be a lot of opportunity, but I think it's still, really fraught with a lot of issues. And I think really looking at this as not only just a challenge, but also an opportunity. Using technology and technology around marketing as well as on compliance, I think is a huge opportunity. I run marketing. I also run IT, and along with a bunch of other things.
Many hats.
Yes, and so I think the opportunity is obviously something that using AI can allow us to be a lot more efficient. Which is, as far as the bank's concerned, there's a lot of pressure. We're publicly traded. There's a lot of pressure, obviously, to continue to have really solid earnings. But things have gotten a lot more expensive for us as a bank, and so it really puts a lot of pressure for us to even exist for the next couple of years, and really thinking about how do we stay standalone versus combining with someone else that has a lot more scale. And I think using AI is going to be able to help us be able to do something that a lot of the larger banks are trying to do, or invest money into it in the tens of millions, if not billions of dollars, like Chase. We spent $10 million in IT last year. Obviously, Chase, I think they spent $15 billion. And so it's kind of it's doing it smartly, I think, is that opportunity that we're excited about to lean into.
I like how you said it, that within every challenge, there's very much an opportunity. So I guess that's what we're talking about, right? The opportunities for how do we get more efficient in this space. And before we talk about the opportunities, I wanted to talk about what kind of AI use cases do you see already being utilized in the space, you or in the industry, and if it's for underwriting or such as machine learning, right, or in some other fields? Just curious if you can weigh in on the current usage already, if you use it, and for what.
Let's go the opposite
Yeah,
direction.
okay.
Here we go.
So
We'll go back and forth.
we kind of take the method of running pilots, allowing us to quickly learn and to do things without necessarily having to invest a lot. And so we've done probably 3 or 4 pilots at this point. The first one was really around kind of customer acquisition on the front end, being able to help a small business collect that information on a Friday night at 10 p.m. when we don't have a banker around to be able to answer questions. And so that we saw that and we said, okay, we obviously need to do a much better job on the front end of being able to work with small businesses, being able to get there, being able to answer their questions quickly and efficiently. So we've seen success with that. I think one of the other pilots we did is really more on the back end of things. is really thinking about our credit policy. And with our SBA loans, there's an SOP, that standard operating procedure of kind of how to work. And it's a large document that most people, frontline staff, even compliance people, underwriters have been doing it for decades, don't necessarily understand some of the changes. And so using a tool to be able to help answer questions quickly and efficiently is something that even the SBA themselves, you have to send an email in, and it takes 2 days, sometimes 3 days for them to respond to the question. If we can accelerate that allows us to be able to get to answering a potential borrower question and be able to get them money a lot faster. So those are some of the things. On the compliance side, we see obviously lots of opportunity to be more efficient. We started testing some things. We still have folks in our BSA side are learning how to use pivot tables. Well, let's just jump to the next level and say let's actually use AI to be able to move quick on the compliance front. So just lots of different use cases across the bank itself to be able to test. And so piloting things has been really helpful for us.
Let's turn that back on. Great.
Yeah, so I think very similar, right? Like we're also exploring sort of different.
We're having a little light show here. Thank you for that. We needed that.
The practical uses of AI, right? Like, and especially in the compliance and the CX space, it's about what are these manual processes that we can automate, right? Like ultimately, the reason why we want to use AI, either it needs to be better, like more accurate decisions, or it needs to be faster, or you need to have like significant cost savings. So narrowing it in those buckets, like we sort of like are looking at all of our use cases and where we have these big cost burdens, manual processes, routine tasks that we can automate. And this spans across your complaints handling, which I think Spring Labs is sort of taking the lead on. But even other cases, even within
Thank you for
complaints,
considering us.
yeah, and I think even within complaints, there are different use cases because there's trends analysis, there is reporting, there is automation of like simple chatbots for routing the complaints in your own compliance testing. So multiple use cases. So every organization will need to go through that exercise on their end to figure out what is it that they want and want to automate. Besides complaint, obviously a lot of opportunity in onboarding, document verification, a simple sort of routing and automation on KYC tasks, KYB tasks. So a lot of opportunity in good tech that we are seeing there. And obviously, like when it comes to credit, fair lending, it's more sensitive. And I know the room here and the room outside is buzzing with innovation, but it's also buzzing with skepticism, right? And there was a recent Gartner report that predicted that by the end of 2025, 30% of all AI projects would be abandoned. And they were sort of going in from the direction that it's not so much about implementation of these models, but more about the data that each organization is storing and how accessible that is. And to that, like it was also like, I think the CTO of Deloitte made a comment that no CEO wants to take on a 9-figure project to replace the plumbing, right? Because you have data that is unstructured in different systems, which is making much, much harder to leverage these technologies often. So I think as we look ahead, like it's also not just a matter of where we find the use case which can work for us, but also like, are we at a stage where we can use it? Like, so this is something that every organization will probably need to go through their own exercise and figure out. But a lot of promise, but it needs to meet with all practicalities.
Yeah, and I think about when you're applying AI or machine learning, however I don't know, some people use those interchangeably. I think it's thinking what's low stakes, high reward, right? And that's where we've started. For example, Copilot with all of our engineers, where they can have a bot that helps them and write their code. I think that's an attractive place to start. Or content marketing, or a chat bot, that we've done around kind of the front end when a customer comes in and they're trying to fill out an application and they have basic questions. And 75, we've implemented, some tools there, and 75% of the questions that are the routine questions that a business owner asks when they are applying for a loan can be solved through an AI bot. But then you start to think about, okay, the stakes start to get higher and more concerning. you're a lot more skeptical, a lot more concerned about those tests and doing a lot more kind of pilot. You're now starting to use sensitive data. The decision of whether it makes the right decision based on the data that was fed may have liability attached to it and other things like that. So especially in lending, I think it's what are the human tasks that are mundane that you can use a bot to be able to go and solve for and increase your efficiency that are low stakes. And that's kind of identity verification where, some things like that where you're going and validating information. We use machine learning a lot more than AI, honestly, around, especially like a big part of our engine is leveraging cash flow data. And so cash flow data, the challenge with cash flow data is that you go and you read bank transaction data and you have to categorize each one of the transactions in the profit and loss, right? Is this revenue or is this an expense or is this a balance sheet item? And being able to analyze millions of other transactions that we've gathered over 13 years and being able to use the tools to make that a smart engine to determine, okay, I'm going to categorize it this way. And then the ultimate output of that is a bunch of these analytics of the cash flow health of that business. So that's less AI and more machine learning, but a lot of the heavy data, of our data science teams and whatnot are kind of focused on those outputs.
And do you think, so I feel like machine learning the regulators have gotten accustomed to machine learning. It's something that they've sort of, it's been around for at least a decade. Do you feel like there is similar familiarity that will be happening with regulators, or we're far away from that?
I can take that. So we had our exam and I spoke to the examiner about some of the AI stuff we're doing because there was a few American Banker articles about what we're up to. They specifically asked me and they're like, okay, tell us what's going on. And, I said, oh, it's marketing. It's very similar to chatbots. Chatbots have been around for a while and they were like, okay, that's fine. Like, as long as it's not making decisioning, whatever. And I think that they don't really understand it yet. And they're going to definitely be the last to understand it. They're trying to figure it out, but I think there's so much other things going on that I think that it's just, as long as you're not doing anything super scary to them, then I think it's fine for now. But I think that's going to be the issue we're going to run into pretty quickly here is all the things we're doing could be pretty scary. What
do you think is the scariest to a regulator in AI?
Just not being able to understand what's happening. Just the speed. I think the speed of anything in banking is always, it's kind of a challenge because speed is actually what's going to help, banks like us win. But at the same time, speed is something that can obviously crush a bank. So I think that speed piece is this thing that it's going to make everyone nervous.
And I feel like we are, like, even before the regulators, people in risk and compliance at these fintechs and banks, they need to get comfortable, right? Like, we are sort of in the early stages of where we are talking about this generative AI, sort of more advanced in machine learning models and which have been around. People have comprehensive frameworks for model risk governance and all of that. But I think this is progressing at such a fast pace where people just need to understand the technology and be able to test internally first before even like explaining this to the regulators. And so there is that hesitation. But again, so trust and technology needs to grow together and hand in hand, and it will grow together eventually. And if you think of, take the example of autonomous cars, right? Like, we started with simple adaptive cruise control, maintaining the speed. Then we had sort of lane centering, then changing lanes. And now sort of my electric car can take me from point A to point B. When I did it for the first time, I was just braking like every 2 seconds. And now I'm much more comfortable. So I think, but that was sort of, we're in that stage with the cars with miles and miles and miles of data. So unless we have that data available to train these models, to make sure there's no bias in these models for like more complex use cases when it comes to credit underwriting or even risk assessments, I think we need just much more sort of faith and trust to be able to do that and test a lot more, especially like from the compliance and risk viewpoint.
No, you're good. What about so chatbots with customer interactions? How do you feel about that? Do you think that's something that you envision doing, or sort of like customer service interactions directly with consumer customers using chatbots? Any thoughts on that?
Yeah, we do that today.
Okay.
Yeah, especially nights and weekends, and even most every conversation that comes in through customer service, or we have a chat, feature on our site. It all starts with the chatbot, and at some point, it's trained when to hand it off to one of our customer service team members. But like I said, it now handles 75% of all of our kind of customer service inbound as far as interactions is through the chatbot.
That's fascinating. Do you find it to be accurate? Obviously, it's working for you. So this is
So we have a curated set of data. I mean, we have years and years of interactions with customers, whether it was through text or email or other things like that we could have fed it. We took a bunch and we curated it, and we spent a lot of time kind of going through and putting guardrails around it, because you didn't want to feed it too much. It could be feeding it from a rep that was not well trained and that had a bad experience and whatnot. So a lot of before we kind of got it started, it was all around curating the content to make sure when would it answer a question, and when would it recommend that the customer talk to an agent. And so, like I said, it handles 75%, but it's kind of the same mundane questions. I shouldn't say mundane, but similar questions that people have when they're filling out an app. They're the most common ones that people ask every time, that have the kind of the same answers. And so it handles a lot of customer interactions, but the amount of content isn't super broad.
That makes sense. And I guess, so you all talked about you touched on some of the things some of the future that you see in AI, but I'm curious, for each one of you, what do you see as the most exciting potential development in AI and the SMB space, SMB lending space?
For me, it's the efficiency of things. It's that speed and efficiency. I mean, being able to potentially run a bank with a couple people is something that's actually true. I heard someone's actually working on trying to apply for a charter that's going to be completely AI native. We'll see how that goes. Probably not going to happen, but at least for a couple of years. But I wish them well, because I think it's definitely a huge opportunity to serve customers faster. And I think that's what's really missing in banking. I mean, I think fintechs wouldn't necessarily be doing as well, or even exist in many cases if banks could actually get it together on the technology front. We have the charter, we have the licensing, we have the cost of capital advantage, but we don't have technology, and being able to utilize it without using partners at this point.
Yeah, very similar, right? Like the speed with which you can lend to small businesses. And because, again, as I mentioned earlier, there's just a long process for them when it comes to document verification, credit sort of risk. So this is something with AI, with all the different tools that are coming up in the market, like even using different alternative data sources for real-time cash flow. So I think it's very rapid and speedy for the business to make these real-time decisions. And that's where the biggest sort of opportunity is for the business. And at the same time, like compliance with, we'll need to test, we'll need to get comfortable, but that would be sort of the promise here.
I think the thing I get excited about almost always when I think about innovation in small business lending is always on lending. So the opportunity to be able to have a business owner, you're attached to some data source, and then it's reevaluating that data source and then proactively recommending when they should apply for a loan or not. They don't even have to apply at that point. That they just says, hey, you're actually, based on the data that I'm reading, you may need a loan here, and you're already eligible for $50,000, right? And the cues of data with that business owner based on kind of other business owners and going through a process and saying, okay, well, this is a landscaper, and we know they're seasonal. And based on some of the transaction data that I'm evaluating with this business, it appears that they would likely need a loan for their business coming up. And so now it can be proactive and smart around recommending, and here may be the best loan that you have access to. So like it's that's again using some machine learning, some AI with that experience, but it's proactively putting capital into the hands of a business owner, so they never have to like really think about it. It just kind of flows with them. Sometimes the volume that they're approved is higher, and sometimes it's lower, based on the health of that business and the needs of that business.
Great.
Actually, a great point, because there are tools that are sort of coming in the market that are also matching these businesses with the right product, with the type of interest rate that they would want, given their overall financial health. So it's pretty fascinating on what's happening in the type of sort of potential in the products that are coming to market.
Yeah, I think businesses obviously have been underserved dramatically, and I think it's because of not being able to have the ability to cash flow, be able to underwrite that. And I think that's the opportunity here, is being able to reach businesses that may not necessarily know about, a bank loan or merchant cash advance, even with a better price. And so I think that's the big opportunity here, as well as making it easier. We're getting a lot of customers that are reaching out that don't speak English. Well, we would have never known how to really properly serve them, and now with AI, we can actually be able to better reach them and be able to help them with their needs and questions.
I don't think we can end this panel without me kind of mention, like, Ryan is so unique in the banking space. I'm going to embarrass him for a second. So we have a partnership with Bankwell. And first of all, what other banks have a chief innovation officer that is up on the stage talking about AI? Very few in the country, right? And so his viewpoint, or Bankwell's approach to lending and innovation, is super unique. Banks have always kind of been slow manual underwriting around kind of doing small business loans, kind of have done larger commercial loans, $1 million loans, $2 million loans, because they get ROI with a manual underwriting process with a larger loan. And so to be able to say, okay, well, there's this huge unmet market of small businesses that don't need $1 million loan, they need a $50,000 loan. And to have a bank be able to say, yeah, I can underwrite that, I can use technology, and I can do it and get ROI, is super unique in the space. Now, more banks will get that, but I love what Bankwell is doing to try and kind of lead out in the space to be able to help small business owners adopt some of these technologies and do it in an innovative way. So
thanks for the free PR.
You're welcome.
Ryan, we're already impressed, but now we're just blown away. And now a completely unbiased question. Do you see a lot of opportunity for efficiencies in complaints analysis?
Yes.
Driving from AI? I don't know why I'm asking that, but unrelated to
yes,
anything.
absolutely. I think complaints is one area where it's very predictable, right? Like, you have certain routine manual tasks that every complaints team, customer support team has, and that you can sort of automate pretty easily, right? Like, there are very complex use cases. Complaints, I feel, is not one of them, because you just have so much of data available already to be able to come in and just synthesize that for meaningful insights and trends. I think it's very powerful, and it's a no-brainer to adopt with companies like that.
Yeah, we're evaluating tools and have tested some where it's kind of listening to our systems, record every single call with every customer interaction that we come in. And so to be able to listen to those calls and be able to identify keywords, whether the tone of the call is escalated and maybe it's, okay, there's a conflict, or maybe they've said a word, or there's a curse word in there, or some word that they're not supposed to be able to say, and flag it to be able to say, okay, well, this is happening on this call. And our compliance team can now go listen to that call and focus in and provide it as an opportunity for training and feedback or concern resolution or other things like that. So definitely, I think there's a bunch of opportunities from that perspective.
Thank you. I appreciate that feedback. And I guess jumping into challenges, right? Obviously, we have touched quite a bit on challenges on different panels. What do you think are the challenges to adoption of AI? What are the biggest challenges?
I can go. First of all, again, it's the data, right? Like, you need clean, structured data, and invest in how sort of this data is available to you to be able to use some of these AI sort of technologies. Second, it's the regulatory environment that we're in. So everybody needs to get comfortable with these use cases, with the use of certain technologies that you're integrating with, and regulators need to get comfortable with it. There are obviously like bills coming out on AI where it needs to go hand in hand with human oversight. So I think the space will evolve and we'll all learn. But at the same time, I think just making sure that you can explain what you're doing is going to be critical. And lastly, I think just making sure, like, as you're storing and maybe just a future outlook, as you're thinking about this already, and we are sort of already in this era of using AI, data hygiene, like, just so important to like invest in it, because 2 years from down the line from here, like if you have done that, like I feel like companies would be in a much better competitive spot to be able to bring their own financial products to market much quicker.
Thank you.
I'd say culturally for a bank. I mean, that's the biggest thing. I mean, even our board, who's probably, half of them are 65-year-old attorneys, all the way down to frontline staff.
Attorneys make everything more difficult.
Tell me about it. That's really it. It's cultural. I mean, I think there's a lot of fear, I guess, around it, and then really being able to actually use it day to day. I mean, we're not a mature fintech like you both have, and that's really the issue is being able to adopt this.
Yeah, I think my team is also concerned about protection of data. So a lot of tools, you want to go out and use a tool, but you're sharing a huge amount of data with this tool, and it's using that to learn. And so if it's not a walled garden where you're protecting it, and I think there's some concerns around that. I also think around decisioning, it's just like Pooja used the example of the car. Like we started with low stakes of kind of adaptive cruise control. You don't start in full self-drive like right out of the gates, because there's high consequences, right? And there's liability when the tool makes mistakes, and you didn't kind of start low stakes and then train it. And so I think we're very much in inning one and have a lot to learn before we can turn these tools loose. We have to like confirm over and over and over again that they are doing what they are intended doing without the negative consequences that can come from it.
My advice would also be just think about balanced adoption, right? Like you don't have to sort of invest in AI or overly invest in AI for very mission critical business processes, right? Like just start small, start doing POCs and test models. So I feel like that would be a good sort of balanced approach where you can automate some of these routine tasks with human oversight for more critical ones. And that will help you get comfortable with the technology over time.
Great. Thank you. Well, I'm getting a warning that we should be wrapping up, but just a final question. Hopefully we'll be seeing you back at this conference next year. And what would be your predictions of where AI will be in a year?
Not a tarot card reader. But certainly, I think it will advance. And as I mentioned, I hope the Gartner report is not true, but some of these companies that are promising a lot of like streamlining of basic processes, I think that's where we'll see maximum adoption, and also like these companies becoming more sort of frontline and
say the regulatory environment will probably pick up a little bit more, and I think there'll probably be some things that are potentially looking at getting passed.
Regulatory perspective?
Yeah.
I think there will be advanced, but I also think there will be a thinning of the herd of the number of applications and tools that are out there, and you'll start to have some winners that will emerge, and some of the theoretical ones that there's so many AI startups right now, and I don't think all of them will remain.
Great. Well, thank you so much for your time. This has been very insightful, and thank you to all of you for joining us. And we'll be around for questions. We're hoping to do Q&A, but I think we're out of time. Thank you, everyone.